Hello, this is Brian Resney, President of Resney Wealth Management, bringing you an important update about the economy and the investment markets. Well, a couple weeks ago, we had two real nice luncheon updates for our clients. I'm glad a lot of you did attend. We had a lot of excellent questions. I want to discuss some of the questions that I did receive and just generally speaking, how the economy in the U.S. and really the world is panning out. So a number of the questions that kind of came in were just generally speaking, do I see a recovery? What about hyperinflation? What about devaluation of the dollar? Things of that nature. And then, of course, the current administration, do I agree or disagree, with some of the things that are going on? So generally speaking, the U.S. economy is going to do quite well the next couple years. And realistically, the next 5 to 10 years could be quite good. We're going to get some peaks and valleys, folks. So we're going to get these, inter-year corrections in every asset class, as I talk about all the time. So expect a 10 or 12% correction this year. We're going to get it. We may not get it, but we'll probably get it. All that means is your $1 million is going to drop down to $900,000 on its way, hopefully, back to new high ground. Remember, nothing goes straight up. You got stair-step pattern up. You come down a couple steps, you go back 5 or 6 more steps up, maybe come down a step or 2. Volatility is extremely normal, and there's no way to get around it, to be brutally honest. So, the next 5 to 10 years in the U.S. should be good growth. The Biden administration is going to spend a bunch of money, basically, as I've talked before. Democrats spend money. Republicans spend money, just in slightly different areas. That's going to grow the overall U.S. economy. Some areas will do a little bit better than others, but generally speaking, the U.S. economy should do quite well. The rest of the world is not going to do as well as the U.S. in our opinion, and we are not invested there currently, although we are always looking at other economies around the world for positives and negatives against the U.S. and or other investment opportunities abroad. So just remember that currently we're in the U.S. Basically, but there's always opportunities abroad. But if I look at country specific, the U.S. is probably going to be one of the stronger places to be invested, at least for the next couple years. As for the dollar is going to continue to be the reserve currency for the foreseeable future. I wouldn't worry about that. As for hyperinflation, we're going to have transitory inflation. There's going to be pockets of higher inflation. In fact, I had a client ask a question about, inflation and lumber prices up 300% and all these kinds of things. One of the things I want to stress is this, and this is a great question, by the way, of this client. Lumber prices are up. Guess what, folks? It only affects a minute group of people that are building houses. It doesn't affect the whole economy or the whole world economy. While you're building a house and it's a little more costly, yes, I understand, but that is not widespread inflation. There's going to be pockets of inflation. You have to remember, you have pent-up demand. You have people going back into the market to purchase goods and services. It's going to push inflation up for temporary periods of time. But as for lumber, great example. Why are lumber prices up so much? Simple. People are building houses, so there's a demand, and the problem is we have a short of supply. The majority of the lumber coming into the U.S. comes from where? Canada. Canada has been on lockdown. Their lumber mills haven't been cranking out lumber. In the next 6 months or so to 12 months, as Canada gets fully back on track, you'll get the supply needed. Demand will probably wane a little bit, and prices will come back down to normal. This is what happens all the time in various pockets of transitory inflation. So we're not seeing Jimmy Carter style inflation, but we will see transitory inflation. Does anybody like it? No. If you're building a house today, is it going to cost you more money? Certainly. 12 months, 24 months from now, will it probably cost you less to build that same house? Probably, as again, supplies come back into the demand equation. Always supply and demand. To really have hyper long-term inflation, you'd have to have a labor market fully back to work, 3.5% unemployment, which we're not going to have for years, and you'd have to have massive increases in wages in order for people to spend more to go against the supply constraints. So again, we do not see that at all. We're going to see, again, pockets of volatility. We're going to see the economy overall grow. I look for high GDP growth in the U.S. economy this year and next year, and then taper it back down probably to 2 to 3%, maybe slightly better, over the next 5 years or so on average. That's not going to be bad. Taxes are going to go up. Unfortunately, if you make $1 million, they're saying your taxes are definitely going up. Although if they repeal some of the tax cuts from the previous administration, a lot of people's taxes will go up. If your taxes go up $1,000 a year or $2,000 a year, it's not going to really impact our clients at all. You're not going to like it, but ultimately it's not going to impact you. I ultimately see that the world is going to continue to evolve. It's going to grow. And I really look for greener pastures as we continue through this year and next year. So again, while volatility is normal, while there's a lot of rhetoric out there about the world's coming to an end or the devaluation of the dollar or inflation, things will even its way out over time. Transitory situations, again, are short-lived, but we look for those greener pastures. As always, if you have any questions or concerns as a client, give me a call at the office. I'd love to talk to you. If you haven't scheduled either a phone review or an office review, give our office a call. We'd be more than happy to schedule the appropriate appointment based upon scheduling. And as always, we appreciate your business and your trust, and make sure you have yourself a safe and profitable day.